Vinati Organics, let's talk about their road map and growth map. Vinati Saraf Mutreja, Managing Director and CEO at Vinati Organics, joins us on the show right now. Vinati, hi, morning. Great to have you on ET Now once again. Just talking about the new ATBS commissioning phase 1, which is live now, and phase 2, which is expected by April, May of next year. How quickly do you think the new capacity is going to be absorbed?
Yeah, well, good morning. I think for the total capacity addition, we are increasing our capacity from 40,000 to 60,000 tons by almost 50%, if one can say that. That will, of course, that is keeping in mind a 3-year view, and that will take 3 years to ramp up. However, the first phase of 10,000 tons, which is already commissioned, there we are seeing good offtake as we do have an order backlog. So at least the first phase should be utilized over the next 1 year.
And a VOPL ramp up. Hi, firstly, good morning. This is Harsha. The VOPL ramp up, is that playing out? And how is it playing out, your assessment?
Yeah, good morning, Harsh. Well, VOPL is a set of new products, different products catering to different industries. We have gone in with a new process, a new technology over there, and hence that is taking some time to stabilize. But however, our qualities of our samples and commercial trials have taken place, and our quality is well received by the customers. So I do see the ramp up happening over the next 6 months to 1 year.
So, Vinati, as we understand that you're looking at a sizable Capex as well, right? Tell me, what's the breakup like and how is it that you're going to utilize the Capex money?
Actually, a lot of our Capex is already done, whether it is the ATBS new line, as well as a VOPL investment, as well as additives, which happened last year or 2 years back. So we don't have a huge chunk of Capex planned over the next 2 years because we are waiting it out to see how the utilization for this plans out.
And with regard to top line growth, H1 has been relatively muted for you, if I can call it that. Still confident of the 20% kind of growth? I know you've given a 3-year CAGR and not FY26 as 20% growth, but that will make the 3-year CAGR even more steep if FY26 growth doesn't come through. So trying to get a sense of those.
Yeah, well, I should reword myself from top line to volume growth, because what has happened is while our cumulative volumes across products has increased, the prices have come down simply because the raw material prices have fallen. And you can see that in the increased EBITDA margins as well. And hence you see a muted revenue, whereas there's been a good volume uptake for Q on Q or year on year.
And Vinati, so is therefore the right metric to use EBITDA rather than top line?
Absolutely.
So
yeah.
So you look at EBITDA.
Growth, yeah.
Sorry, please go ahead.
Yeah, that's absolutely right. You should look at EBITDA growth over 3 years or over 2 years, and that's a much more accurate metric.
And even your margins have gone up substantially. How sustainable at in fact 28+%?
Yeah, I would say 26 to 27% over 3 years, because they do fluctuate based on raw material prices. And when raw material prices are low, the margins tend to look higher. When the raw material prices are higher, the margins tend to look lower, whereas the absolute rupee per kg doesn't change that much.
And see, you have a majority of your top line coming from exports. Give us the sense, this US trade deal, does it at all impact you? And if it were to come through, what would the benefits be? What benefits would accrue to you pretty much immediately and over the medium term?
So, well, about 50% of our total sales come from exports.
Yes.
About half of that is to the US. Now, majority of which is for ATBS and related products, which has been under exemption from the tariffs because it goes in the oil and gas industry. So actually the tariffs or the trade deal has very little impact on our products. Of course, IBB, butyl phenols, AO, they are a part of it, but that's a very small percentage of exports. And again, as far as IBB is concerned, there is no competition. It's only from China. So sales have not been impacted or will not be impacted by trade deals or tariffs, at least as yet.
Okay, Vinati, we'll let you go on that note. Thanks as always for joining in. Good to be speaking with you.